Hi there, I'm Dean Heskin. Thank you for tuning in to our podcast, The Secret War on Cash, where we take a really in-depth look at some of the different dynamics that have been kind of taking shape and changing throughout the course of the last few years in our economy. The Secret War on Cash actually is a report that we put together, good Lord, probably the initial copy or version of it, I think was almost 15 years ago. And we've kind of been watching things develop as the dollar has deteriorated in value and as we've been seeing a lot of things change politically and financially, not just here domestically, but literally around the globe. And in fact, if you haven't received a copy of this report yet, I encourage you to either contact us at our toll free number, 1 800 289 2646. You can call or text us at that number, 1 800 or visit us online at www.swissamerica.com. You'll see that in the show or show description, if you will. And so anyway, if you haven't gotten that, I think it's vitally important and necessary in so much as that there has just been so many different things that have been happening. And that's what we're going to get into here today. Chris, good morning. We're almost, well, in fact, let me be the first for those of you listening to one of the first to maybe wish you a happy Thanksgiving, as by the time this airs, you will be right next to Thanksgiving, or we should be what, a day away from Thanksgiving, and did this a little early
Yeah.
so we could get it done. Are you all ready, Chris?
As ready as I'm gonna be. How about that?
It's
I've got a couple
something
other
is,
little things I'm gonna do, but no, it's gonna be easy this year. So easy on me, I should say. Somebody else is doing most of the work.
oh wow, that's too bad because normally you do it and you do a very good job. I've
Yeah.
had your cooking.
Yeah, Christmas Eve is mine this year. So that'll be my busy food preparation day.
No? Well, excuse me. Let's get right into it here.
Yeah.
Let's look at our first article. This is from Watcher Guru. And it's hard to believe. I was thinking about this, and we've talked about this several times in the podcast. When we started doing this podcast and suggesting to people that they get themselves into metals, get diversified,
Mhm.
get positioned into metals, gold was at 2,000 an ounce, and now
Yep.
we're sitting over 4,000 an ounce. And as the title of this article says, UBS turns mega bullish and gold to 4,900 as the U.S. dollar cracks. And that is a fact. The US dollar has been cracking. And as I
Mhm.
looked at this, I mean, this is just one of several name brand, if you want to call it, investment firms out there that is taking very bullish positions on gold. And why would they not? The
Yeah.
appreciation is there, the protectionary side of it is there, and really, and again, for those of you listening, if you do click on this link, it's a pretty quick read, but it really just boils it down to what's happening. And they say we expect gold demand to rise further in 2026, influenced by anticipated Fed rate cuts, lower real yields, continued geopolitical uncertainties, and changes in the domestic US policy environment. And what I like about that, having personally speaking, I've been in this business now, as you know, Chris, for a little over 33 years. That's just a very simple breakdown, but accurate explanation as to not only why gold has been doing what it's been doing, but why you can likely expect it to continue doing what it's been doing. And so I think that, never, if those of you who are tuned in are like, well, gold's already made its move, I've kind of missed out on it. That couldn't be further from the truth. And four to $5,000 an ounce gold is a conservative estimate, even to some of the others out there who are looking in the not too distant future for prices as much as 6,000 an ounce. Chris.
Yep. That's right. And I mean, what's funny is 5, 6, 7 years ago, we would have killed to find an article just like this, even though, we were talking about all of these issues, right? And now we can find a new one, almost multiple articles every day. And they are all saying that gold is going to continue to run into the $5,000, $6,000 range. And that's what they're talking about now because they only really talk about a year or so ahead. They don't like to make 3-year and 5-year projections very often. But yeah, I would just tell people that you would think everybody would have jumped on board right now or by now, right, with as much movement as we've seen. But really, statistically, I think it's something like 5% of the investors out there have some of their money into gold, and let alone physical gold, which is probably even a smaller percentage. So People definitely need to get on board. And I know it's new for a lot of people. That's where talking to a company like us, at least we can kind of help you walk before you run and walk you through the basics. But looking at all the money that's flowing into ETFs and physical metal, 26 billion in the last 3 months added to ETFs. And so this isn't just central banks anymore. It's also large hedge funds and individual investors. And so everybody is starting to kind of wake up, but there's still a lot more room to run. So, and not only
Sure.
gold but silver. I mean, they even talk about it in here with gold running into the $5,000 range. They expect silver to be 85 to 95, and we're sitting right around 50. Give or take right now too.
That's right. And it is funny because silver does tend to get a little overshadowed based on everything that's happening with gold because central banks are buying it, BRICS nations are
Hmm.
buying it, institutions are buying it. And silver, the reason that you don't hear as much about it is just because of if they're looking to put billions of dollars into the marketplace to do so on
Right.
silver is a very cumbersome task. But silver, the percentage wise, the gains that are expected there are absolutely tremendous. You're 100% right.
Yeah.
So let's looking at this second article, and the reason I chose this one, let's just grab the title of it real quick. Um, you've got BRICS leads the way as new global hub of food security.
Hmm.
Now, what is interesting about this is we just talked about how the dollar is cracking, and this is what UBS is talking about. Well, the reason in part the dollar is cracking is because of this BRICS alliance, because of their initiative or their move, whatever you want to call it, of de-dollarization. And we saw as soon as Trump took office, he aggressively went after BRICS nations with tariffs and things of this nature, trying to slow it down. We just saw recently in the news where the Middle East had dedicated $1 trillion worth of commerce or trade or whatever to the United States to help bolster the dollar. All things that in concept or theory are important because that's what's going to help give the dollar some strength or perhaps stop cracking. But again, when
Hmm.
you have these BRICS nations, they represent in nearly the 40 percentile of the food resources and sources out there, Chris. And it's very difficult to create leverage against them because they bring their own leverage to the table.
Hmm.
They do not depend on the dollar, and they're actually kind of, and they've said as much, they're kind of tired of the dollar reliance and the dollar dependency. And this what started off a couple years ago as we started talking about it, it's been going on for a little longer than that, but what started off as just being like a concept that we mentioned many times. We didn't hear the Biden administration, confronting or addressing in any way. Now it really has become a movement of sorts, and it's a movement with teeth to it. They're talking about already having their currency in place. They've shored up their gold reserves huge, and
Hmm.
now you get into this is the first time that I've seen anything that really got into the food aspect of it, and that's what's really
Yeah.
important because gold is great, silver is great, but you can't eat it. Food,
Right.
that's a very important aspect to this or piece of this puzzle, let's say.
Yeah, yeah, that's what I thought was interesting about this too, because we talk about BRICS and what they've done currency wise to our dollar, and obviously their gold reserves, and even their mining. How much mining of important minerals they control around the world, but you never really hear them talk much about the food supply. So this was interesting, and nearly, I mean, let's just call it close to 50% of global food production, 40% of global water resources. um, what they're really trying to do here is create a central exchange for other BRICS nations where they can trade, grain, meat, rice, corn, wheat, all of these things, and not have to use the US dollar, number one, and not have to do transactions with the US. So again, it's we're receiving competition on all these different fronts. It's not
Right.
like we can just fight them with our currency now. This is expanded into virtually every aspect of production around the globe. So um, it's interesting, and it's also kind of frightening, because as you say, with that much control over the food supply, they automatically give themselves a lot of leverage, and all of a sudden the U.S. is a little less important when we're making trade deals with these other countries.
Right. Well, and I can't remember the percentage off the top of my head, but I think when it came to just in general natural resources, they were in these collective nations are like in the
Mhm.
70 maybe percentile, maybe even
It
close
was
to 80
high.
percentile.
Yeah.
Very high, very high. And I
Hmm.
mean, again, that's where I don't know if it was one or two podcasts ago, we put that chart up for people to look at the debt that each nation has. And so not only we are blowing the competition away in terms of having the most debt, and that's not a positive thing,
Yeah,
obviously.
we're winning that contest.
Right. But when you couple the amount of the food and the natural resources that they all represent, and the fact that they're
Hmm.
not in debt up to their eyeballs like we are, that gives them even greater leverage. And I mean, it just seems
Hmm.
like the perfect storm is kind of brewing here, unfortunately, and brewing to the point where it'll be somewhat detrimental to the United States, when push comes to shove. So, well,
Yeah.
thank you for that, Chris. Have a
Yep.
happy Thanksgiving, and all of you listening, please do the same. In fact, if you'd like some more information, there's also, you see the QR code here. Go ahead and click on that. You can get free information that'll kind of tell you a little bit more about some of the things happening with the dollar, with BRICS, some of the things happening with metals prices. And, if it's something that you kind of entertain the notion of doing, I even will explain to you how you can get involved and get yourself diversified and positioned in metals right away. So, thanks so much. Again, happy Thanksgiving. Talk to you soon, and have a great rest of your day, great rest of your week.
Yep. Take care.